We all hear how slow the market was in Toronto, although people were anticipating a slight momentum during the fall when it usually is for the most part in Toronto. This doesn't look anything like normal in Toronto. In today's video, I would like to walk you through some of the listings in the freehold market in the heart of Toronto. And at the end, please let me know if you like this kind of localized Toronto real estate market analysis. If so, I could perhaps create more video like this in other areas as well. As I'm helping a client analyze their situation who is looking to change their lifestyle and wants to sell their property from a condo townhouse to a somewhat bigger freehold property in Toronto. So how exactly is the market trending? First of all, the seller must understand the current real estate market. I'm sure you already heard that the latest sale transactions are down -5.2% year over year in August. In this table, you can see the year 2022 versus 2023 sales transactions. And by just looking at the sales figure and paying attention to the interest rate, you could easily sum up what is happening now. Since January, we didn't start the year with great sales in 2023, but it wasn't a big change if you compare December 2022 with 3,117, and it was just a slight dip of 0.55% month over month change. The big news was in February 2023 when they first announced the rate pause, and immediately the sales picked up and increased by 54% over the last month. Although compared to February of 2022, there is still a big gap, but apparently the sales are starting to trend up. From there, we have 4 consecutive positive changes in March for 44%, in April for 9%, and in May for 20%. Then in June, the Bank of Canada decided to raise the interest rate, and immediately we saw the downturn sale in June down 17%, and worse in July close to 30%. It is quite obvious how the interest rate plays a big part in the sales activities, and in August, although we didn't see much difference from last year in 2022, it didn't drop off that much from July either. However, as of September, I don't see any improvement when most fall times are the second highest season for the real estate. But there is a big caveat. To be honest, we didn't have a normal year for almost 4 years. For the past 10 years before the pandemic, we were just too used to low interest. As of now, it is all about the buyers and seller mentality in order to maneuver the real estate market. If you ask my opinion, I don't see why, even if they paused the interest rate just now in September, instead of the spurt we saw in February that sparked the sales, I don't think it will impact as much this time because we have to understand we are at a higher interest rate compared to February. As we approach the end of September, I don't think we will have any upswing at all. The listings on the market are piling up like they were supposed to in the fall, but sales are declining and it is getting tough for sellers to sell at their expectations. I've seen Toronto condo units sitting in the market for over 80 days, and it is quite common, especially when the price is not matching recent sales with similar units in the area. Don't get me wrong, I still see units selling, but mostly those units are in a better location or the unit has a better value per square foot. Whatever the case, the properties are still sitting on the market for way longer than usual. In terms of average prices in the GTA, according to the Toronto Real Estate Board, we saw that compared year over year in August, believe it or not, we had an uptick from 1,079,048 to 1,082,496. And if you check the year over year percentage change for all freehold property in detached, semi-detached, and townhouses, they were all up. That is telling us that the seller are not willing to let go of the properties, hence the sales are down. Now back to the analysis for a client of mine, and this is what I saw in the particular semi-detached home in Palmerston, Little Italy in Toronto. Although we saw that the average price didn't drop much, there are many pockets in the GTA that are dropping significantly. Let's take this as an example in which this property was once of interest to my client. Although this checked almost all the boxes for my client, there was a major deciding factor that didn't meet my client's expectations. The new renovations were excellent. However, the second floor, 3 bedrooms were downsized to 2 bedrooms with 2 enormous bathrooms. For my client, who prioritized more room above the brand new cutting edge larger bathroom, that was a deal breaker. That was the design decision condition, of course, and the buyer may value it more based on who they are. It also has a basement unit with a separate entrance and is now rented for $1,800 per month. Everything else was fantastic. If someone had purchased it today, it may have been the ideal mortgage help. Now let's take a deep dive into the history of the sale of this property at 89 Palmerston Avenue. As you can see, the current owner purchased the unit in August of 2019 for $1,268,800. Browsing the picture of the property, you can see that they updated the entire property from top to bottom, which looks astonishing and modern. All the new appliances and gourmet kitchen, hardwood flooring throughout, and upgraded glass stairwells. I can imagine the amount of money that was put in there. We saw that they had put it on sale in late April of 2022 for $1.88 million. I suppose that was when the interest rate started, and obviously the seller didn't get the price he wanted, so the listing was terminated. It was then relisted the following month in May 2022 for 1.28 from 1.8, and I think the seller could still be losing money with the amount of renovation that he spent. Obviously, I don't know if he got any offers before, but if he had, even at a slight loss, he could have exited and suffered less loss. It is currently relisted in September of 2023 for $1.19 million and is still sitting on the market. So far, I know the market has been slow and he could get even less for now. So from the price he got for the property and the renovation that he invested, this could easily be a few $100,000 loss. This is just an example of how much freehold property has come down so far in a local area like in the Little Italy. Like I said, some other area might not have been affected much, but certainly there are neighborhoods that are starting to tumble. On another side note, as I'm researching for my client, I also discovered the amount of price change and termination listing are through the roof now. This is the data that I extracted from the Toronto board, and I don't see many people or real estate agents talking about it, and that is a huge indication of how the market is behaving. By the way, this kind of data you won't find with a simple Google search. It takes a good amount of time to put it together, so if you like the information, don't forget to like the video and subscribe if you haven't already done so. What I did was pull the 2022 terminated transaction and price change by month and compare to this year 2023. So to be frank, terminated doesn't all mean that it is terminated because they are not selling, but sometimes it means that the listing might not have sold on the offer presentation date but could end up selling after. But most of the time it means that it didn't sell. The number of terminated listings in January between 2022 and 2023 is over 100 more than previous year, and February was only around 70 more than in 2022. Nothing drastic. However, starting in March, we can notice that last year 2022 was higher, and more significantly in April, May, and June. If you recall, that was when the highest interest rate hike happened. That makes sense when more transactions were terminated at the same time last year. And on the other side, early this year in 2023, we had the rate pause since March, and therefore you can see why we had much fewer terminated transactions during March, April, May, and June. And we went on to a rapid growth between this period. And finally, the Bank of Canada raised the interest rate again in June and July of this year of 2023, and once again to disrupt the real estate market. However, it is more apparent currently in September that it is supposed to pick up, but instead we are way higher in interest right now than last year at the same time. I think the most interesting part of this data is actually in the price change category. The price change usually happens when the listings are sitting longer in the market and the seller are forced to reduce the price. As you can see, we didn't see any last year in 2022. To be frank, that rarely happens in Toronto, where most listings get sold pretty fast during the seller's market. And obviously, according to this table, we started to see a few during May and June, broke double digits in July, went up quite significantly during August, and now exploded in September. This is clearly buyer's market territory, where many listings are reducing prices, and the month of inventory was also an all-time high. Consider that we didn't see any last year. This is quite shocking in today's market. Quite frankly, if you are the buyer today, especially if you are an upsizer, that could work out in your favor, since you will have much more negotiating power, and the higher the value of the property, the more it might fall than the lower property value. If that makes sense to you, the bottom line is that buyers are also more hesitant to buy since they still think that it could also go lower. Either way, we are entering the buyer's market, and I don't think it would change, especially if we get another interest rate hike for the remainder of the year. I hope you find some valuable information about the market in this video. Feel free to reach out to me if you are in a similar situation or have some general inquiry about the current real estate market. I know it is quite confusing and there have been many uncertainties in this market. Anyway, I hope hope you have a wonderful day, and I'll see you in the next video. Bye.